You ever look at a great company and just wonder, how did the best investors get in so early? Well, it's not luck, and it's definitely not magic. It's actually a framework, a repeatable one. And that's exactly what we're going to break down, piece by piece, right now. I mean, this is the big question, right? It feels like this impossible puzzle. But the truth is, there's a really disciplined approach behind it all, a mental model that you can actually learn and use. And it all boils down to four key pillars. Yep, these four pillars. The entire method really rests on them. You can think of them like a checklist that helps you stay clear and rational. So let's dive in and tackle them one by one.
All right, pillar number one. Now, this one's probably the most personal because, and this is kind of interesting, the analysis doesn't actually start with a company. It starts with you.
So this is what we call the circle of competence. And listen, here's the key thing to get. The goal is not to have some giant, massive circle. Not at all. The real goal is just knowing with total clarity where the edges of your circle are, and then having the discipline to stay inside those lines. And that leads to a really simple but super powerful test. If you can't sit down and explain to a friend in simple terms how a company makes its money, you just pass. You move on. And look, that's not a weakness, it's your best defense against making a really big mistake. Okay, so let's move on to pillar number two. So once you've found a company that's inside your circle, the next question is it built to last? And to figure that out, we're going to use this great metaphor of a castle. Yes, so just imagine a great business is like a big, profitable castle. Now, in a competitive world, you've got rivals, armies of them, all trying to attack that castle and steal its riches, right? Well, the economic moat is that big ditch around the castle. It's the company's competitive advantage, the thing that keeps all those rivals at bay. But here's the thing. A moat isn't just one single thing. We actually look at it in two ways. You've got the qualitative moat, that's kind of the story, the why behind the advantage, and then you have the quantitative moat, that's the proof in the pudding, the cold, hard numbers that show it's real. So let's talk about the why first, the qualitative side. This could be something like an intangible asset. Think about the brand power of Coca-Cola, right? People just choose it. Or it could be high switching costs. Once you're in the Microsoft ecosystem, it's just a pain to leave. And then there's the network effect, where a company like Meta just gets stronger and stronger the more people use it. But look, a great story is one thing. It has to actually show up in the numbers. And that's where the quantitative moat comes in. We're looking for the proof, things like a high return on invested capital year after year, consistent profit margins, tons of free cash flow. These are the numbers that tell you the story is real, that it's not just talk.
Okay, so you've got a business. You understand it's got a nice, wide moat protecting it. But who's in charge of the castle? And that brings us to pillar number three, the people, the management team. When it comes down to it, you're looking for two things, integrity and talent. That's it. Remember, you're not just buying a piece of paper. You're basically going into business with these people, and you need them to be smart, for sure, but you also need them to be honest. Because, let me tell you, talent without integrity, that's just a ticking time bomb. So how do you actually figure this out? Well, first, you dig into their track record. Have they been honest, good stewards of the business? Second, you check for alignment. Do they own a lot of stock themselves? You want their interests to be the same as your interests. And third, you look at how they handle money, their capital allocation. Are they smart about reinvesting the company's profits to make it even stronger? And that brings us to the final pillar. And honestly, this might be the most important one of all. This is the one that protects you when things go wrong, because they will. It protects you from the future, which is always uncertain, and from your own mistakes. To really get this, you have to burn one idea into your brain. Price is not value. I'll say it again. Price is not value. The price is just what the stock market is shouting at you on any given day. The value is what the business is actually worth. And the big secret? Those two numbers are rarely, if ever, the same. And this quote from Buffett just nails it. A margin of safety is like building a bridge. You make sure the bridge can hold 30,000 pounds, but you only ever plan to drive 10,000-pound trucks across it. Why? For safety. It's a buffer. And investing, it means you figure out what a company's worth, and then you insist on buying it for way, way less. That discount, that is your margin of safety. It's your protection. All right, so we have our four pillars. That's the what to look for. But now for the how. Where do you actually go to find all this stuff?
Well, it's probably less complicated than you think. In fact, most of what you need is in one single document that anyone can get.
And the best part? No secret handshakes, no insider info needed. The answers are usually just hiding in plain sight, right inside the company's annual report. Every public company has to release one.
Okay, but let's be real, these things can be crazy long, hundreds of pages. So you need a game plan. Here's the pro tip. You focus on just 3 key sections to start. Number 1, the business description. Number 2, the risk factors. And number 3, management's discussion and analysis, or MD&A for short. Think of this as your treasure map.
And check out how perfectly this connects back to our 4 pillars. When you read the business description, what are you doing? You're testing your circle of competence. When you read the risk factors, you're analyzing the economic moat, seeing what could go wrong. And that MD&A, that's your window into the minds of the management team. See, it all just clicks together. So there you have it, the 4 pillars and the toolkit you need to actually use them. This isn't just some abstract theory, it's a real, practical way to think clearly about businesses. So the only question left, the one that kicks off this whole journey, is for you. What company is already sitting inside your circle?